Oh man, so Fantom tumbles 5% as Bitcoin falls 1% ahead of one of the most important weeks we have in the calendar. Yes, on Friday, we get the most important speech that Jerome Powell will probably give all of this year at the end of the Jackson Hole Symposium. Markets will be looking to him to see if he comes out hawkish, if he gives us any clues or telegraphs what his plan is going to be over the next few months and more importantly the year, as he gives us clues on what the next interest rate hike could be. We're seeing Bitcoin continue to fall today, as you can see, opening up its next weekly candle here in the red. The previous one closing yesterday as a full bullish engulfing candle, sending us to the downside. You can see if we bring out our 200 moving average, we are well below that here on Bitcoin, and just goes to show that we've closed back down, and now things could get pretty nasty here. I mean, from a technical perspective, when you're looking at things, remember, these are consolidations, big move to the downside. Consolidation, could this be an extended move to the downside? In order for that to change, markets will have to do something, and we'll have to do something quickly from a macro perspective, okay? So that's something we need to keep an eye out this week. We've also got the Q2 GDP figure. We'll get a revision of this Q2 GDP figure. Remember, it came in as minus 0.9 on the previous reading. We need to find out, will it stay that way? Because technically, this is the definition of a recession, right? But will they revise that positive? Will they revise it as less of a negative? Or, in the worst case, make it even more negative, right? Minus 1, minus 1.2, minus 1.3. They show it as getting closer to zero, markets could take that a little bit more positively. Then we have Jackson Hole, okay? Now remember, part of the pain we've seen last week was because the markets have started to now go back. They're yo-yoing, right? 1 minute they're pricing in 50 basis points. Next minute they're pricing in 75 basis points. Then they're pricing back in 50 basis points. They absolutely don't know. And because we've got such a long time for our next FOMC meeting, September the 21st here, as you can see, they're going to keep changing their minds, and that's going to reflect in what the market is seeing. So now what we're seeing, previously we were seeing 75% of the market roughly were pricing in just 50 basis points. Now it's switched again. Now 50% of the market is pricing in 75 basis points, more stronger rate hike. Now, part of the reasons around this is, initially we saw good CPI data, right? Good CPI data made the market think, okay, we're not going to see that rate hike. We're not going to see a big rate hike. So they felt confident. But then what we saw was the jobs market was remaining strong. So when the jobs market was showing strength, that made people think that, maybe Jerome Powell is going to use that as a reason for him to continue to be aggressive in his rate hike. Fear and greed index is now sitting at 29, far away from the 45 we were seeing last week, where there was particular exuberance in the market. So the market is feeling a little bit more fearful now, and that's understandable. I mean, if we head on back into the Bitcoin chart and head into the daily chart, we're back in this channel, right? After this big rejection we saw falling back down from trend, we're back below 22,000 in this channel, and no doubt people are going to feel a little bit more fearful. Now, when we take a look at this, we're in a bit of a bearish consolidation phase. So what this tends to happen is this can be a continuation pattern. When you've had a big extended move to the downside, the bears cool off for a little bit, allow the bulls to have a little bit of momentum, and then fall back down to the downside. So this is what I'm watching out for. If we get a break below here, and you can go down into the hourly or even smaller time frames here to keep an eye on it, I won't be particularly surprised if you bounce off the bottom and run towards the top at 21,700 before coming back down. But what the bulls will want to do is they need to break to the top side of this. Break to the top side of this, get back above 22,000 and hold above there. That's the escape plan for the bulls. If we're going to get our bullish scenario, we want to see this, come out here and just hold above here and try to work our way back above 22. The worrying thing is if you break down to the downside and continue your movement to the lower parts of this channel. Remember, this channel here is between 22,000 and 18,700. So we need to keep an eye on this. Things can get a lot nastier. The reason we're managing to hold up here is we've got this pivot point, right? So we're getting a support from this pivot point here, which is what we're managing to hold here. If we fall from here, your next level is this psychological level at 20,000, which holds, but then more importantly is this level here, okay? And that level comes in at about 19,200 range. That's what I'll be looking out for. Is if we fall from this, I'll be looking to set some limit buys at around those price points for my DCA points. And if you guys want to buy any crypto, if you want to trade any crypto, trade any of these moves, you can do so using BYBIT or BitGet. Links in description. Two really good platforms. There aren't many better platforms out there in terms of trading. Those are the ones I use day to day. And if that changes, I will let you know. But for now, those are the bonuses in the description. Do check those out. Those are affiliate links which support the channel as well. Now, if we lose that level at 19,200, then things can get pretty nasty here on Bitcoin. Then I can start calling for getting back to the lows at 17,600, okay? But we'll wait until we lose this pivot point where we're at, and then the next one. So let's keep that in focus for now. Now, what's going on with Fantom? Because Fantom is not having a good day today, down 5%. And as you can see, very similar to Bitcoin, right? I mean, let's just go back a second from where we're at. We were creating this rising wedge, and in the top of this rising wedge, I made a video telling you guys we could be breaking down from the bottom from this rising wedge, and things can get nasty. And I shared with you the different pivot points and the risks to the downside, all the way down to 23 cents. Now that's playing out. So congratulations to any of you who managed to avoid this 26-27% dump here to the downside and got out early on any of your short-term trades. I mean, in terms of long-term position, I mean, I'm not selling. I just continue to hold and continue to dollar cost average. But if you're in a short-term position here, riding this upward trade to the upside, congratulations if you manage to catch that reversal and get out. Now, where is support? You're seeing support come in from this level at around 29 cents. Really important. But we have seen us lose 30 cents now, okay? So we are using all of this space right down to the bottom of this pivot point. If we don't hold here, similar to Bitcoin, if it doesn't hold it, you need to come back down to the next pivot point, which is where it would be a good position for me to enter some limit buys at around the 23 cents mark. Okay, so that's what we're looking for here. Now if we notch down to the hourly chart, you will see here this consolidation pattern isn't as strong as Bitcoin's. Bitcoin's had a much stronger consolidation pattern, but this one's far weaker to the downside, so it's more likely to continue. I mean, it's leaning towards the bottom, right? It's not doing something like this, like Bitcoin's was doing like this direction. It's curling over already. So we're seeing weakness here in the charts as expected here on altcoins, and altcoins are getting hit today. You can see that in the dominance, right? Dominance climbing today 0.6% on the day, which is showing that people are moving a little bit to to Bitcoin today as data gets a little bit more worrisome. Now, what is this all tied to? Well, the main catalyst we need to be focused on, which I've mentioned a good number of times to you guys, is this dollar index. And I know it gets boring, but we have to focus on this dollar index. We need dollar index to reverse to the downside for us to have any hope on crypto and the stock market, right? We need this to start falling. Remember, people flock to this in times of difficulty. When they're worried about the economy, dollar index rises, okay? And therefore, inversely, stocks and then crypto, which is correlated to stocks, start falling to the downside. We need this to show weakness, but unfortunately, it's not showing any weakness. The run Bitcoin had, and the reason it was a relief rally, was simply because the dollar index was cooling off. It just took a break. It took a break, came into its EMA ribbon, and now it's bouncing back with vengeance. The worry here is if it creates an all-time high above 109, which is the wick from this candle here, at about 109, then things can get really worrying, right? It can really start to build some momentum and push higher and higher, which would really squeeze crypto down to those scary price targets, which I was sharing with you yesterday. Now, what is the positive case? Well, the positive case is you get a lower high. If this can fail to hit 109 and start curling over and show some weakness, that is good. Longer term, we want it to lose the daily EMA. I mean, no two ways about it. We want it to flip below its daily EMA ribbon, and that could set up a more sustained move for Bitcoin. Even better is losing the weekly EMA ribbon, but you can see how far away they are from doing that. And this only tends to happen when the policy is being accommodative. Right now, they're tightening, right? With the Fed are tightening, they're increasing interest rates, they're not helping the economy, they're certainly not printing, and therefore that's what's going to happen when they do start being more accommodative. So when we start seeing ideas of pausing of rate hikes and maybe loosening interest rates, who knows when that could come, maybe next year, then we could see that fall to the downside, and that could be your sustained bull run for crypto. But for now, dollar index is showing strength. Even if it took a couple of weeks off and came into its EMA ribbon, it's still showing really good strength. So to bet against it on the medium to short term is a difficult position. If you're just dollar cost averaging into your crypto, that's a great thing to do. But if you're expecting crazy returns right now on your crypto, this is the wrong market for that unless you're short-term trading with a strategy, with risk management, with a game plan. So for those of you who are trying to be long-term investors, what a great time for us to be accumulating. Not looking at the price per se, right? Not looking at the returns we're getting. Now's not the time to be looking at your portfolio and saying, oh, look, my portfolio's up 100%. It's irrelevant. What you need to focus now is on the coins. How many coins do you have? How many Bitcoin do you own? How many Fantom coins do you have in your wallet? Because it doesn't matter that the market is valuing Fantom at 29 cents right now. It doesn't matter. As long as you've got conviction that at least it's going to get back to all-time highs or back to its Fibonacci ratio in that $2 region, then what does it matter to you, right? You just want to accumulate your favorite project. So go ask yourself, when you flick through your wallet, don't look at the dollar amount. It's irrelevant. Go look at how many Bitcoin do you own? Have you got your first Bitcoin? Do you have your second Bitcoin? If you've got more than that, how do you get to the next tranche? How do you get to the next tranche? You got yourself a bag of Fantom. Are you happy with that level of bag, given the price targets you expect in the future? If you're not, what a great time to accumulate. And if you're not accumulating, great. At least you've identified that you're not accumulating, but ask yourself, why? What is it that's stopping you from pulling the trigger? Because trust me, if you're not buying now, it gets a lot more difficult when the price goes up. Some of you got that taste already when Bitcoin was heading towards 25. How much more difficult was that to buy than when Bitcoin was at 17,600? And that's just in a short time frame. You saw the price of 17,600, and then at 25 felt very, very expensive. How do you think 40,000 Bitcoin is going to feel? How do you think 60,000, 70,000 Bitcoin is going to feel? You're going to struggle to accumulate. So you need to ask yourself what's going on. And if the reason you're not accumulating is cash, then identify that cash is the issue, and you need to focus on how to build out your cash pile. And there's various different ways you can do that. If you want to do that just within crypto, then obviously you want to do a bit more short-term trading to try build up a little bit of cash and start moving that short-term trading into your long-term investment portfolio. If you have good ways of bringing in income elsewhere, if you have a business, if you're good at real estate, if you're a good video editor or a thumbnail designer or anything else, then go use that and invest in your crypto, right? That's your cash cow, and then you can funnel that to your investments. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. If you appreciate this type of content, let me know in the comments below. Go watch this video here, and I'll see you in the next one.